What's going on, guys? It's Lewis here with Cryptolete. If you've been watching this series on how to trade and invest into Bitcoin and cryptocurrencies, then you already know that and you've already been through parts 1 and 2 because this is part 3 of the how to trade and invest into Bitcoin and cryptocurrency series. We have covered a lot of material, so we're going to quickly go back through what we covered, and then we will get right into the meat and the juice of trading and investing, risk management, and a whole bunch more in this video. So in the first 2 videos, we discussed the basic fundamentals of literally just what makes a market, the buyers, the sellers, and everything that goes into actually being able to have a market to buy and sell and hopefully make some money. Then we went into investing, and I talked about the different investing strategies that you can use for your long-term growth. And after that, we dove into trading, and we talked about the different trading styles that you could use and the different strategies that you could use as well. And we asked a really important question that you should have an answer to, which is, what is the trading and investment style that works for you? After going over the fundamentals of what investing and trading is, we started diving a little bit deeper and actually going into the how-to in terms of talking about fundamental analysis and technical analysis and how to use technical analysis and read charts to be able to actually trade cryptocurrencies and, buy and sell and make some money. We went over the different types of technical analysis, which are price action TA and computerized TA. We talked about the different patterns that you could look for when we talked about price action TA, and I told you a few of my favorite computerized technical analysis indicators that you could use when doing computerized TA. And after that, we went into the order book and the order history, which are 2 other tools that traders like to use. And after we dove into all of those things, we decided to actually take a step back and take the 5,000 foot view and realize that in order to actually use any of these things effectively, you have to know what the current market sentiment is. You have to know what the psychology of the market is at the time and what's actually going on. And we discussed market cycles, so you know where the maximum opportunity for growth is, which is when the price is very, very low and the fundamental value of the cryptocurrency, of the project, of even when it's a stock, if it's a company, whatever, if the value is very, very high, but the price is very, very low, then there's a mismatch there, and that's when you have the biggest opportunity of actually making substantial gains. So that is everything that we covered, and now in this final videos of the 3-part series on how to trade and invest into Bitcoin and cryptocurrencies, we're actually going to go over some actual trading strategies. I'm going to show you the trading strategies that I use, one of them, which has been working really, really well. And we're going to talk about risk management and dive deep into that, which is vitally important if you want to be a successful trader, because a lot of people like to say that successful traders aren't actually quote-unquote traders, but more risk managers. And if you can just not lose your money, then you can have enough capital and be in the markets when there is a huge run up, and that's when you can make a lot of money. So that's sort of a key thing to understand, is you really do not want to lose money. You want to keep your losses as small as possible and stick with it so that when the cycle comes around again and it starts blowing up, you can take full advantage of that with as much capital as possible. And then at the end of this video, I'm going to go through a step-by-step process of a trade for you so you can just see basically how it's done. There is one thing that I forgot to do, which is to actually put in my position size calculator to calculate my position size. And that actually gets very technical. It's super complex. If you aren't really an expert at this, or you don't have a good understanding, you wouldn't understand that. But I'm going to have another video, separate video on that in its entirety anyway. So you're going to get basically everything that I do when I set up a trade. I'm going to show you exactly how I was able to make over 200% over the last 2 months alone without using any margin margin or leverage trading as well. So let's go on to trading strategies. I'm going to take myself off the screen. I'm going to put the presentation on and just read the screen and listen to my voice, and you'll be good. Remember, take notes. And if you want more information like this, be sure to sign up for the Cryptolete, mastery course. I have way more information in depth than in this video. And you'll also obviously get access to the Cryptolete VIP group over at cryptolete.com. So if you want more information, go there. Also, be sure to smash the like button, leave a comment if this video was helpful or if you have any questions, and be sure to follow me on Twitter at Louis Raskin and on Instagram at Cryptolete, and also on Facebook at Cryptolete. I'll see you at the end of the video. So let's go on to trading strategies. There are different trading strategies, and it's important to have different strategies depending on what the trend is. A really big piece of advice I have is to always remember that the trend is your friend. When the price is going up on the long-term time scale, your bias should be bullish. You should only long, and you should feel comfortable letting your winners ride when we're in a bull market. There are people out there who love to short the pops in a bull market, and they love to long the dips in a bear market for 1 to 3%. And to be honest, I have no idea why people do this. This strategy makes absolutely no sense to me when you could simply long in a bull market and make 10, 20, or 50% or more with less stress and less time in front of the computer. Why people like to scalp for 1 to 2% is honestly just ridiculous to me. In the time you spend in front of your computer doing these short scalps, you can instead be working or creating another business or doing something else with your time that will make you more money than the trades that you win. If the market is in a downtrend, you should short, which means that you sell and then you buy back in for a profit. 90% of retail traders, they only long. They want the market to go up. And normally, this is actually fine because the natural inclination of the market is to go up over time. The only issue with that is that there are times where markets crash, such as in 2018. When markets crash, that is when you need to either stay out of the market or short it. I remember in 2018, like I mentioned before, all of the crypto influencers, they were screaming at the top of their lungs to keep buying. They were all saying that it was just a dip and you should just buy the dip. Unfortunately, these influencers had absolutely no idea what they were talking about, and a lot of people lost a lot of money by listening to them. As soon as I realized that we were in a bear market, I went flat or cashed out, and I waited for the price to drop to get back in. There are very, very few traders that I have seen that are actually professional and actually understand how to trade. And it took me a long time to find them. And those were the traders that were taking their profits at $10,000, $15,000, $18,000 per Bitcoin, and then started shorting the market and shorting Bitcoin when it had the really, really big drop. And that just makes the most sense to me. I don't know why you would want to long in a bear market or short in a bull market. If you know why people do that, leave it in the comments below. And this is actually why when we're in bull markets, I only long. When we're in bear markets, I only short. And that is something that I highly recommend. So something else that you need to do is you need to keep track of your trades. This is something that is literally just like vitally important. If you are trading and you're trying to improve yourself, the way you improve yourself, no matter if it's with trading or if it's on a specific diet, or you're trying to gain muscle or lose weight or get better at a certain skill, you should write down and track your progress. Tracking your progress lets you know how you're doing and gives you things to improve upon that are objective. So you keep track of your trades and change things based off of the way that your trades go. For instance, if you notice that you keep losing on a particular pair or a particular trading style, just stop trading that pair or that trading style. Find a new pair or a new trading style and trade that. If you notice that a particular trading strategy is doing really well, then hone in on that strategy and use it more often or bet more. My favorite strategy that works really well is buying at the 61.8 golden Fibonacci level and selling when the price moves back up to the 38.2. This is just one of my many different strategies that I personally use, and it works really, really well. It's simple and it works. I've made well over 100% using this strategy just this month alone. And now we're actually starting to get to the very end of this lecture, and we cannot go over trading without talking about risk management. So we're just going to quickly touch on this. Then after we go over risk management, you're going to see exactly how I put on a trade. So what you really need to realize when it comes to trading is that you will not win every single trade. No trader in the world has a 100% win rate. To win in trading, it's essential that you keep your losses small. So many times you will have 5 winning trades, but you will give it all back with 1 loser if you don't use a stop loss and manage your risk properly. Stick to your game plan without emotions. This is essential. Take your small losses. You can get back your small losses with just 1 win. Don't be afraid to cut your trades. Every single trade should end up in one of 4 ways. The first way it could end is with a big win. This is obviously the best way to end a trade. The second way that a trade could end is with a small win. This is the second best outcome. The third way to end a trade is to end it at break even. You neither lose money or gain money when you break even. Sometimes the trade changes direction and you want to get out at break even because you're uncomfortable with it. Or maybe you get into a trade and then 5 seconds later you want to get out. That's totally okay. Just get out. It's not a big deal. If you didn't lose any money, it doesn't matter. And the last way that a trade can end is with a small loss. Small losses, they are inevitable. They're part of the game. Never fret about a small loss. 1 or 2 wins and you should make up for your small loss. So just have your loss and move on to the next trade. Whenever you make a trade, you need to have what's known as risk tolerance. This is your risk limit. It's the maximum amount of money that you're willing to lose if the trade doesn't go the way that you want it to go. So here's the key. The risk limit should never, ever exceed more than 3% of your entire account balance. Most professionals don't even allow this risk limit to exceed more than 2% of their entire account balance. So let's go over an example of what that means. What is the risk limit at 2%, which is what most professionals do? Let's say that you have $10,000 in your account and you want to make a trade. If we're using the 2% risk limit that most professional traders use, that means that if the trade goes against you, the maximum amount of money that you will lose is 2% of $10,000 or $200. So if your stop loss, which is the price you will sell at if the trade goes against you, is 2% away from your entry, well, then you can bet your entire account balance because you are risking 2% of your entire account balance. Let's say your stop loss is 4% away from your entry. If your stop loss is 4% away from your entry, you don't want to put your entire balance on the line because if you lose that trade, then you'll lose 4% of your entire account balance. Instead, you would want to put half of your account balance or $5,000 on that trade. That way, if your stop loss does get hit, you'll still only lose $200, which, like we mentioned, falls in line with the 2% of your entire $10,000 balance that you're willing to risk. So here's an example of a trade that I recently won. You could see that if I won this trade, which I ended up winning, I would win 30%. You can also see that if I lost this trade, I would lose 9.9 or let's just say 10%. Using a $10,000 account as our example account and keeping our risk to 2%, we would only want to risk at the most $200. Since the stop loss for this particular trade was set at 10%, I would need to figure out how much I could put into the trade so that if I lose 10% of that amount, it wouldn't be over $200, which is my risk limit. So if I put my entire account balance of $10,000 on this trade and it went against me, I would lose $1,000. I'd lose 10%. And obviously you never want to lose 10% of your entire account balance. That's way too high. If I put half of my account balance on this trade and I lost the trade, I would have ended up losing $500. Now that's still too high of a risk tolerance to have. However, if I put 1/5 of my entire account, which would be $2,000, on this trade and I lost this trade, then I would lose $200 because my entire account is $10,000. 1/5 of that is $2,000. If I put $2,000 on this trade and I lost 10% of that, then that equals $200. Well, $200 is 2% of my total account. So that falls in line with proper risk management. So I would happily put $2,000 on this trade. With a chance to win 30% and only lose 10%, my reward to risk ratio is 3-to-1. I'd win 3 times the amount than compared to if I lost. I'd win in this particular trade $600 if I won this trade, which I did, and I would lose only $200 if I lost this trade. That's an amazing reward to risk ratio. Now, here's the cool part. If you understand different strategies, market sentiment, and how likely different strategies are to work, you can adjust your risk tolerance based off of these things. And this just comes with time and practice. For instance, this trade that I just showed you, I know for a fact that it has an incredibly high chance of working and a very, very slim chance of not working. My entry was at the golden Fibonacci ratio of 61.8%. It lined up perfectly with major horizontal support and resistance levels, and it aligned with the diagonal long-term support. When you have so many different things lining up in your favor, you could risk a lot more. That's because as more and more things like technical indicators line up in your favor, that gives you what's known as confluence. And the more confluences you have, the better set up your trade is. So by using that knowledge and putting on really good trades, you could make a lot of money and you could really increase your account. And this is exactly how I managed to increase my portfolio by over 100% in under 1 month. And something that I think is really cool to know is that for comparison purposes, the average increase for the stock market is 7 to 12% per year. With crypto, you can make 7 to 12% per day if you know what you're doing. And that honestly is why I got into it. That's why I quit my health and wellness practice after spending nearly a decade getting degrees and certifications and building a business around it. I saw the opportunity in crypto and I jumped on board. Unfortunately, I did not get lucky in 2017 and catch the incredible move up where you could throw $1,000 in and make 20 grand in a few weeks. However, that actually fueled me to learn more and to dedicate my time to understanding how to invest and how to trade so that I could take advantage of different markets when things like that happen. Just imagine when you first discovered the internet and how early it really was. Imagine if you really utilized the internet and created companies around it, or if you invested into internet stocks. How much of an opportunity was that? Well, the same opportunity is with blockchain and cryptocurrencies right now. Since then, I've spent every day and night for sometimes 14 hours at a time studying the charts, learning the markets, and learning how to trade and invest effectively. This is what I teach in my crypto mastery course at Cryptolete.com. Now, we're about to go over an example trade. Before I do that though, I just want to reward you for getting this far in the video. If you've gotten this far, that means that you're dedicated to learning and really mastering this stuff. To reward you, I want to give you a discount so that you can join the Cryptolete VIP, learn how to trade, get specific strategies, and get my personal trades sent to you if you want particular trades to copy and paste. Just message me on Instagram at Cryptolete, letting me know that you've watched this video and you're watching this, you got this far, and I'll hook you up. Now, I want to actually show you an example of how I trade. Alright guys, so you're about to see how I actually put on a trade and just one of the many strategies that I like to use. The strategy that I'm going to show you here, I call the Cryptolete Simple Fib Strat. This is what I do. I open up TradingView. This is TradingView right here. And then what I do is I open up a couple indicators. The first one that I open up is the MACD, which you could see down here. This is the MACD. It's a special one. And then I open up the RSI, which is this yellow line you could see right here as the RSI. This is, again, a special RSI that I give out to members. And then I open up the stochastic RSI, which is this blue and orange line right here. All of these indicators, I go over in great detail in the course. Can't really do that right now because this video would be 10 hours long, but this is how I trade. I start out on the daily time frame, and unless of course the cryptocurrency in question has a very, very long history, then I'll start out on the weekly. But with this one, you could fit the entire lifespan of the coin in the daily chart, so I'll use the daily. So the first thing that I do is I look at the long, very high time frame charts, and I'll try to pinpoint any type of supports and resistance levels. So some support and resistance levels that I see, obviously down here is the low, and then up here is the high. So I have the low and then I have the high. And then I will look for some other type of confluences. So this right here, I could see, look, it came down and then it came up and it had resistance, came down, came up, 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 it broke through, but then sold all the way back off basically to the resistance level, and then it could not break through the resistance again. It came all the way back up, all the way back down, and now it hit the absolute low, and then it came back up and it hit the resistance again, and then it came down, it came back up, hit the resistance again. So obviously this is a huge resistance level. This is an incredibly big resistance level. And what happens is when you go through the resistance, usually when you push through the resistance like we see right here, what happens is we come back down sometimes and we retest the resistance as support. The bigger the resistance level is, the stronger it will be as support when we come back down. So right here, it busted through and it closed right above, but you could technically go like this and then say it actually never closed above the resistance level, and that's a big indication that it's a huge resistance level and it wasn't going to break through, and this would be an indicator to actually short if shorting was available for this REN cryptocurrency. So anyway, I look at the large time frames, the very high time frames. I plot down the support and the resistance levels, and then I obviously have the MACD, the RSI, the stochastic RSI, and I look at this. I see, okay, well, this is very, very overbought. So many people bought it. There's huge green candles. I am not going to FOMO in. That's one of the major rules in cryptocurrency. Do not FOMO. And then what I like to do is actually look and see what the Elliott wave count is. Elliott wave is a particular theory that some chartists like to use. I use it only in very, very particular cases. So in this one, what I would do is I would plot 5 waves up, and what I could sort of see, what I'm sort of getting over here is like this. And this tends to make sense to me. So there's 5 waves up. That means whenever there's 5 waves up using this particular Elliott wave theory, there's usually 3 waves down. I have no idea where they were going to, hit, but let's just say this. So what I would do now is I would take the Fibonacci and I would go from the bottom and I would go to the top. Now, if this top kept on going up, I would have to redo the Fibonacci, but right now it looks like it's coming down, so I'm fine with that. So I did the Fibonacci from the very bottom to the very top, and I saw, okay, hey, look, the 61.8 lines up exactly with this resistance level. How like good is that? When you get the 61.8 lining up with such a hard resistance level, you know that something's going to happen right around here. So I looked at this, and then I would take the I would look for something else to try to help me out. So I would take a trend line and I would try to gauge something, something like this, and just try to say, okay, well, this is pretty much support. It keeps on bouncing off of this as support, as support, as support. So, wow, look at that. The C lines up exactly with the 61.8, the trend line support, the horizontal support, previous resistance. The indicators are showing oversold right now, so it's going to come back down, swing back down. And there's just so much confluence here. So what I would do is I would take my long position, I would try to long it right here, and I would long it, and where's a good area to take your profits at? Well, there's a lot of different areas. You could aim for up here, which would be great, 79-80% gains, but I like to be conservative, especially because the whole market is still really iffy right now. So what I would do take profit levels is, first thing I would do is I would look at the 38.2 and I would see if there's any confluence there. Well, there's this little piece of confluence right here. The close happened right around there, and then obviously you could see these two levels right here, and then this bunch right here. So what I would do is I would basically just put my take profit right around that area, the 38.2. I would have my entry at the 61.8 and my stop. What I would do is I would look at this indicator right here, and I would see where there is a lot of volume. I guess the easiest way to explain it is that the levels of interest are where there's a lot of volume and where there's hardly any volume. So I would put it right underneath where there's hardly any volume. And actually what I like to do is to have a moving stop. So I would probably put my stop down here, and then if it hits, I would just simply move my take profit all the way down so that I would get out at break even. But with saying that, let's just put our stop right here. And then this is my trade. This is it. If I win, I'd win 28-30%. If I lose, I'd lose 15%. So my risk to reward is right now 1.87. And for this one, I would also use a particular strategy for my stop losses, where I would not put my stop loss in here. I would just put alerts. So what I would do is I would right click and I would add an alert at this level. And then if my alert goes off, then I would lower my take profit. But regardless, this is how I would trade it. And then we could actually play this out and see how this would go. So if we look at this, and then we actually, let's go down to the 4-hour chart to get a little bit more detail in. We would look at this and we could play this out to see like what actually happened. So the next bar was a crazy bear candle. Bar after that was another bear candle. Bar after that, a little bit up. And then this is really telling. It tried to go back up. The bulls tried to, push it forward, but the bears came in and just knocked it all the way back down. And then they continued to take over, and the bears just sort of took over at this point. And the bears just continued to demolish it. The bulls had one nice little rally, but the bears came back. Bulls had another nice little rally. Bears came back. Bulls had another nice little rally. Bears came back. And this is what happened. So my order was not hit yet, right? So right here, this is where my order was finally hit. My order was put in for 648 and it hit right there. So now I'm in. Now I am in the trade. And if we keep on going, this is what you could see happens. It took me 1, 2, 3, 4 bars. So 4 times 4, 16 hours to get 28%, 28.86%, which is absolutely insane. And you could actually have just took your profit and then put another order in down here, just because at this point you'll say, okay, well, this is really, really good support now because of the resistance that we talked about before. So I already made 28% on this trade. So now you could actually take that profits and then put another buy order in down here. And then if we see what happens, you'd get hit again. You'd see that it would be bouncing off support really nicely. And then boom, you'd have another 28%. So that's 30% times 2. That's almost 60% right there. In how long is this? About under 2 weeks. Under 2 weeks, 60%. Pretty crazy, right? So that's how I trade. I look at the high time frames. I look at support and resistance levels. I look for trend lines. I look for Fibonacci. I'll check out the Elliott wave, see if there's anything that makes sense to me. And then I'll put my long position in here. What I forgot to mention though is that what I'll do after I chart this out is I will publish it. So I'll click publish and then I'll write this out, REN 30% trade. And then once I have all of this down, I'll actually go into my trading software called 3 Commas. So this right here is 3 Commas. And this is just my my practice account basically. So I would go into here and I would click on REN and REN BTC. I would go down, and what I would do is I would click on conditional order, market order, and then I would look back at, you know, I put my order at 648. So I would put 0648. I would market order this. I would set my take profit, and I would set my take profit for 385. Excuse me, 835. And then I would click create trade, and that would be my trade, and that's how I do it. 3 Commas is a software that personally I don't think any newbie or any trader, to be honest, should be trading without 3 Commas. 3 Commas is such a vital part of trading, and it's such a vital part of my trading journey. 3 Commas allows you to set your buy order and your take profit and your stop loss order all at once, all at the very same time, and create your trade. You cannot do this on exchanges. You cannot do this on Binance. And this feature of 3 Commas single-handedly saved my trading career. I went from losing all the time to basically winning all the time, simply because I could do this. I could put my trades in, I could plan them out and put them in, and then step away and not even look at it again, and then come back to winners, and come back to profit. So I'm going to have a link in the description for 3 Commas, and I'll have a lot more videos on 3 Commas. This software is the software that I recommend 100% if you're trading. I don't know, honestly, how people trade without it, unless they're just on their computer all day, every day, and always looking at the charts. But that wastes time, and time is your most precious asset. So do not waste time. You should value time over everything. This helps save time. So get 3 Commas if you're going to be trading. I'll have more videos on 3 Commas later. And that's basically it. This is how I trade. This is what I do. After I set up my trades in TradingView and then I input them into 3 Commas, I literally just walk away. I might set some alerts, and then I'll walk away. And that's it. That's how I trade. And with that, I think that should be the end of the presentation on how to invest and trade Bitcoin and cryptocurrencies. I hope you enjoyed it. All right, there you have it. Part 3 of the 3-part series on how to trade and invest into Bitcoin and cryptocurrencies. I hope that these videos were extremely helpful and informative, and I hope that they helped you learn, a little bit about the markets, Bitcoin, cryptocurrencies, and how to actually trade and invest into them. If they did, be sure to give the videos a thumbs up. It definitely helps. Also, follow me on Instagram and Twitter, because I post a lot on there. Obviously, I can post a lot more on there than I can on YouTube because it's so much easier. You could also feel free to send me a message on any of these platforms at any time, and I will always get back to you. Now, if you want to actually dive deeper than what we covered in these videos, and you want to trade and invest into Bitcoin and cryptocurrencies intelligently, and you want me to be there for you to hold your hand, and you want step-by-step tutorials and videos and everything that you can actually imagine, then definitely join the Cryptolete crew over at cryptolete.com. You'll get access to the group, you'll get access to the videos, to the tutorials, to the VIP membership. You'll get access to everything that you want, and obviously I will be there for you to help you out the entire step of the way. Like I mentioned earlier, I believe that right now with Bitcoin and cryptocurrencies, I think that it's the same opportunity that we had when the internet was first starting out. And can you imagine if we actually put our time and effort into learning about the internet, learning about things like AdWords and Google and, Facebook and Instagram and all of that, and you see all these millionaires that, came about by taking advantage of that? Well, there's a new advantage, a new opportunity. It's crypto, and so that's why I'm involved with it. And if you want to get involved, go to cryptolete.com, shoot me a message on any social media platform. I'll answer any of your questions. And that is pretty much it. I'm going to have a lot more videos coming up in the future, So definitely subscribe and click the notification icon, the little bell on YouTube, so that you don't miss a video, especially if you want to, learn about this type of stuff. And with saying that, I'm gonna sign off now. Remember, you're awesome, stay awesome. I'll see you in the next video, and let's get to the moon together. Peace out.